Thank you for joining me. I'm your host, Robert Kraft, editor-in-chief of StockNewsNow.com. Today we're doing an SNNLive Newscast with Steve Zarrilli, CEO and president of Safeguard Scientifics, Inc. We're speaking with him via Skype from his headquarters in the suburbs of Philadelphia. Safeguard Scientifics, Inc. is a publicly traded company, ticker symbol SFE on the New York Stock Exchange. Steve, welcome to the program.
Thank you, and hello, Robert.
Thank you for coming on. So I wanted to start off with an overview of Safeguard Scientifics. So Steve, the floor is yours.
So Safeguard has been in existence for more than 60 years, launched in 1953, began its life as a public company in 1967, and has been traded on the NYSE since 1971. Safeguard has been a lot of things over that 6-decade period, but today and over the last 10 to 12 years, we have been pretty much focused on providing equity capital to early stage technology companies, principally in the areas of financial services, digital media, and health tech.
You know, that actually leads into my next question because, what I wanted to know is, what is the Safeguard mantra when analyzing new potential investments?
Well, we're constantly looking for what technology is going to offer us in working with these companies and their business models to see how they, under whatever business model they are choosing to pursue, will have outcomes that will create better alternatives in the marketplace. Mm-hmm. So if it's in healthcare or if it's in financial services or even in digital media, it's all about the outcomes that are ultimately created through these business models that the entrepreneur is creating. And we look for some certain technologies that underlie these business models that are state-of-the-art and evolutionary in their own right.
So I spoke with Jeff, the CFO, a little bit earlier this year, and since then the company has posted its first and second quarter financials, as well as some news covering some of the companies in Safeguard's portfolio of investments. And what are some of the highlights, from these last 6 months?
Yeah, we had a really strong first half of the year. We produced a big gain on one of our companies that was acquired by a UK-based pharmaceutical company. The company that we were involved with was called Putney, and Putney was basically selling generic versions of pet medication into the market. We ultimately achieved a 4x return on our capital. So we had approximately $15 million into Putney over about a 4.5-year period of time. That returned almost $60 million to Safeguard and its shareholders. And we actually recognized a $58 million gain in the second quarter. So it was a big quarter for Safeguard and for our shareholders. We're also being very diligent and disciplined this year in putting money to work in new ideas. Valuations have gotten a little softer, which is a good thing long-term for us because we can put that capital to work at a lower entry point. But we're also being disciplined to make sure that we're doing the right diligence on the opportunities that we're seeing. But the pipeline is strong. Last year, we looked at over 900 opportunities. This year, we're on pace to do the same. When the dust settles for 2016, we will have put money to work in another 4 to 6 new names and probably have another exit or 2 before the end of the year.
Only 900?
Only 900. It's amazing how quickly you can get through an opportunity and review it and say go or no go. And we do a really good job at that.
I was going to say, you guys must read faster than anybody I know. That's like 3 a day almost.
Well, you know what? You read a couple of pages and you know if it's either too big or too small or not in the sector. So
there you go.
Process.
So another thing I wanted to know, and you kind of went through this a little bit in the last question. What were in your opinion, what were some of the key milestones that Safeguard achieved in Q2 2016?
Well, one was to ultimately set the table for profitability and continued profitability. I think what our shareholders are looking for, and people who are potentially interested in the stock of Safeguard, they're looking to see that we can have more regular exits, which means more regular profits. And I think the first milestone that was pretty big for us this year was this exit, this acquisition of Putney by an outside party. It was actually anticipated late in 2015. It took a little bit more time. We got a better return out of the ultimate transaction, and our shareholders were pleased. But they're now looking for consistency, and this sets the table, I believe, for for that element of consistency that they're looking for.
And then, moving forward, from what you can tell me, what are some of the goals and milestones for Safeguard going into Q3 and beyond?
So we think that the business model that we have is extraordinarily attractive over the long term. So we want to continue to pursue putting capital to work in anywhere from 4 to 6 to sometimes 8 new opportunities a year. We want to produce those consistent profits and get into that rhythm in a much more substantial way. If we do that, the capital under management will actually grow, and we'll have more capital to do even potentially more deals, or even begin to be more regular with regard to returns to shareholders in other forms. We have had a history of share repurchases in the past when we've had more capital on hand than we needed to put to work. We will do that in the future if that is the case. I know some of our shareholders have also asked us about dividends and things of that nature. And our board is open to considering those once we get into this more stable financial footprint that we've been working on over the last 3.5 years. I joined just at the end of 2012. 2 principal goals that we put forth were, A, let's get more assets under management, meaning more companies, and let's get into a better rhythm of profitability. Well, the first goal has been accomplished in spades and is continuing to be accomplished, and that is we went from about 18 companies within our partner company threshold or group, and now we've gotten that up to almost 30, and our goal is within the next couple of years to probably have 35 to 40 companies under management. And we're also starting to see that now we're into that beginning of that rhythm that we expect to have with regard to profitability. It takes about 4 to 6 years from start to finish to get a company where we get introduced to it, put capital to work, and then ultimately have a chance to exit or monetize. So we're just at the cusp of that 4-year window for a lot of the things that we started to do at the beginning of 2013.
And what's your background? I know you said you came into the business in 2012, but where were your humble beginnings?
Yeah, so I've kind of been doing a lot of different things over a 30-plus year career. I'm 55 years old. I started my career at Deloitte back in the early 80s as an auditor and an accountant. I actually developed a practice unit with some colleagues that focused on early-stage businesses. Safeguard was actually a customer, a client of mine, and we were working with a number of Safeguard companies back in the 80s. I then left that business and started an internet business with a couple of other friends, and we took that business public in 1999. I served initially as its CFO and then as its CEO. We actually raised money from Safeguard before we went public, and it was a big success back in 1999. I then ran a couple of other technology companies and then got recruited here to Safeguard in 2008 as its chief financial officer, and then became CEO at the end of 2012.
And where can our audience go and find more information about Safeguard Scientifics?
Yeah, it's real easy. www.safeguard.com. We've got information not only about the company, its history, but the 27 partner companies that we have today, some of the plans that we have for the future, the background of the team that is here at Safeguard, not only the executive management team, but just as importantly, the investment professionals and the other executives here that provide marketing and finance and operational support to the Safeguard partner companies. It's a holistic approach that we like to take. We think it actually creates value, provides a benefit to our shareholders, and I think that 4x times return that we experienced in April, which is actually is just the recent exit. We've had about 13 over the last 4 or 5 years that have been 2x and greater. It's just another way of demonstrating that we're actually adding a lot of value to these early stage companies as they grow and mature.
Steve, thank you so much for your time. And again, my name is Robert Kraft, and I'm coming to you live on an SNNLive Newscast, where we're recording live via Skype from our studios in Los Angeles. Thank you so much for coming on.
So long, Robert. Thank you.